All right, hey traders, TG Watkins here, and I wanted to show you since we had a pretty crazy week in the markets that you need to always be prepared that in a market like this, things can always go lower. Now, that could flip that around, and if you're trying to short something and it doesn't go lower, be prepared for that too. But what I'm trying to say is, if you ever try to buy something because you think, oh, I mean, it's so oversold, it's got to bounce or something, it does not have to bounce and it does not have to go up. So just keep that in mind. And I've got a couple examples here of names that are super oversold, but they keep going down. So if we look at ARK ETFs, just one thing I want to show you guys, the last couple posts and videos I've been making are about inverse trampoline moves. So price should not be over the 50 if the Moxie indicator is below zero. So that was an inverse trampoline move. The Moxie indicator helped tell you that this was not ready to go long yet and that you should be careful to the long side and maybe not even consider it. The other thing to be looking at is when price came down here and look what it did. It basically flagged sideways into the underside of a downtrending hourly 50 twice. And the Moxie indicator was below zero. So the Moxie indicator below zero told you that basically that moving average was going to be firm to the downside. And even if price happened to punch up through it a little bit, it's a false long move. And that's what that's telling you. And so this is what I mean when you look at something that's really oversold, they don't necessarily have to go up. So like, this move right here pretty far down, and eventually it reached a point where it didn't want to go down any further. So for the time being, it just went sideways. It didn't actually bounce up. Just because it gets oversold doesn't mean it's going to bounce up like that. They can just go sideways until they keep going sideways down like that. So that's ARK. How about PayPal? Look at this thing. It has just been falling off of an absolute cliff. And you think, well, how much further can this thing go? Well, it can keep going. So just like ARK, if you look at this, you could see what did price do? Price did bounce, but it came up into the underside of a downtrending daily 50. Now, at the time, right here, you could see price was over the 50. The Moxie indicator had not quite crossed over zero yet. And so, number one, you just look at the moving averages. They're going down. So all it did is it bounced into a downtrending moving average. So that's kind of your first major clue. And then after that, the Moxie indicator was not green, was not over zero at the time. And when it was, price was already starting to trend down. So that was just kind of a hangover as far as the momentum that goes. On the hourly chart, you can see here's your Moxie price triggered to the downside. You could just see, I mean, look at this thing. It's just going straight down the entire time. And so price dropped. It found a little bit of support at the hourly 200. And it's, again, instead of going up or bouncing, it just went sideways until it ran into more support or resistance and then fell a little bounce and then continued to go down. So what I'm trying to get across is just because they're oversold doesn't mean they have to go up. And then I think, Square was another one. Bigger bounce on this one, sure. But at some point, it's too much. And you can see right here, it was trying to hang on to that daily 50, just couldn't quite do it. Your clue was on the hourly chart. You'll see here how price flagged right into the underside of a downtrending hourly 50, and the Moxie indicator is below zero. So this is how you make sure that just because you see price sitting on what looks like support on that time frame ends up not being support, and you can see it runs right into resistance there. So, all right, guys, thanks again. I'll see you later.